David Cole, your Chief Financial Officer at Swiss Re, the company has strongly increased the net result, but earned premiums went down. May you explain the difference between the two figures?
Certainly. Well, let me start with the premiums. Indeed, on a reported basis, they have gone down, but I think that reflects FX developments over the course of the year. If you look at it on an underlying basis in underlying currencies, we actually continue to see some increase in the overall level of premiums across the group. The net results for the year, of course, were up strongly, over 30%, reflecting two things. First and foremost, all of our business units contributed to our results in 2015, very strong, solid results across the group. And you may recall in 2014, particularly in Q4 of 2014, we took some extraordinary measures related to our life and health reinsurance business that contributed to ongoing strong results in the future and certainly contributed to 2015.
Reserve releases have played a role in your results for a couple of years now. Will this go on, reserve releases, and to what extent do they influence your future results?
So thank you. Indeed, reserve releases have contributed to our results the last several years. It reflects, I think, the strong quality of our underwriting portfolio. We've experienced low claims requests coming into us. We also have benefited from relatively low inflation, certainly lower than what we would have forecast when we originally wrote the business. Now, going forward, we don't predict continuation of positive reserve releases. We operate on a best estimates basis. I would expect across the industry that reserve releases would be lower in the future, reflecting recent developments, but also pricing pressures.
Your currently strong capital base, does it allow for further share buybacks or dividend increases?
Well, let me start by saying it, of course, is our first priority to maintain at all times a superior capitalization. And I think you can say very safely that Swiss Re maintains a very strong capital position. Our excess profits over the last several years have allowed us to not only invest in our business, to continue to develop strong earnings going forward, but have also allowed us to return quite significant amount of capital to our shareholders. In recent years, we used special dividends for that purpose. Going forward, we've said we'll use the share buyback program for that purpose. We continue to maintain a focus on absolute security of our paper, very strong financial position. We look to invest where we can invest wisely. Wisely means both in line with our strategy and at attractive financial returns. And when we have excess capital, we look to return that in a favorable way to our shareholders.
Is there a risk coming from low and negative interest rates for your capital base?
Interest rates don't immediately impact our capital base per se. I do think it's, however, important to recognize that as a long-term investor, lower interest rates, even negative interest rates, do have a dragging impact on our ongoing earnings. That's not Swiss Re specific, that's for any long-term investor. Indeed, individuals will probably recognize that with their savings account as well. But we position our portfolio very well. We have a long-term focus in terms of the way we manage the portfolio. Lower interest rates do have an impact, but I think we're, relatively speaking, extremely well positioned.
As the main responsible for the financial stability of the company, are you worried by the current state of the world financial markets?
Certainly as a CFO, but also just as a citizen, I think you have to stay very alert to what's going on in the financial markets, but also from a geopolitical perspective as well. I think it's fair to say that it's appropriate to be a little worried. I think the appropriate response to that, however, is to make sure that you're well positioned. At Swiss Re, I think we're well positioned.